Hey everybody, welcome to Stock Trading Pro and welcome to Stocks for Breakfast. We got a ton of stuff to talk to you about today. Thank you so much for joining me. If you happen to be new to these weekly meetings, which we have every Monday morning, we kind of set the tone for the week. And here's the big thing that I want to ask you. Have you ever bought a stock where you knew instantly you were screwed? In a heartbeat, you were on the wrong side of that trade? Well, that happened Friday to a certain group of traders, and we're going to actually show you what happened and what it means to setting up the trades for this week. It's one thing to find perfect ideas. It's another thing to find ideas where you can look at it and be like, oh man, that person is in the wrong side, and bam, they're going to be on the wrong side quickly. I'm pretty excited about this. I guess you can kind of tell I'm like a little bit heated up on this because this doesn't happen that often, but when it does, it can be something beautiful. Now, one of the biggest things is stock market bulls have been kind of sweating it recently. Some major stocks, Apple hit the skids, Tesla broke down, Nvidia broke down. Bullish traders this week and probably the last 2 to 3 weeks have been kind of on edge. Where's all that bullish mojo gone? Well, I think today and this week, we're actually going to have a decent mixed bag. The last 2 weeks, we've been leaning more into different sectors, kind of shifted away from technology, kind of shifted away from industrial stocks. I'm going to show you some new ideas today for the entire week. I'm going to map out my game plan for you this week, industries that I'm looking at, and even the stocks that are at or near optimal entries. That means that they have the greatest reward potential at this particular moment. There's one stock that I'm going to show you that is so far gone from the optimal entry. It's a tracking journal trade, which is different from a trading game plan. Trading game plan are the ideas that I'm looking at right now for today and for this week. Tracking journal means they're interesting, but not a good risk reward, even if they might be obvious. So I'm going to break down the entire week. We're going to go to the market. I'm going to give you a big lesson from last week's coaching session that we had. I'm going to talk about a book that's from my bookshelf. We get a ton of questions about the books. We got a lot to talk about today. And I want to just give you a little bit of a heads up. Because of the lessons we're going to go through today, as much as the stock picks that I'm watching this week, you might want to watch this more than one more time and kind of take notes, because there's lessons mixed in with the picks, because I just can't express this strongly enough. Having a setup is not as important as understanding why you should consider buying that stock. And we call it stacking the order flow. We call it building an argument for choosing that particular trade at that particular time. So stick around. Got to put this up here. I'll be back in just 1 second. Okay, so I want to thank everybody for being here with me, both live and on the video. It means a great deal to me. Actually, you know what? I'm going to give you the two announcements that you have. We're actually about to break down, in case you're new to these videos, we're actually going to break down the entire week, and we're going to start out with the market and how the market unfolds. But you can see we actually have a pretty decent way that we look at the market from an entire weekly perspective. So if this kind of stuff excites you, I got two big announcements, actually. The first is we're very excited that we're launching our app this week. Hopefully within sometime between Monday through Friday. It's going to have public forums on there so we can actually carry this discussion a little bit further. Some training on there, discussions, a whole bunch of really good stuff, news updates, stock picks, that kind of stuff. So look for the announcement of the app coming out this week. And something I'm really excited about, what I'm about to show you is is our daily ticker. It's basically where I show all of my research to our community. And we're going to be actually launching a new newsletter to get just the stock picks and the sector rotation and that kind of thing also. So look for an announcement on that really soon as well. I'm very, very excited about that. One of the things I want to bring out is we have a lot of conversations, part of our community, and I think probably one of the most valuable things that we offer as a big benefit of being in our universe. If you didn't know, I had a trading firm in New York City. We had 300 traders spread out around the world. Practice is a very big part of trading, whether you're watching bar by bar replay, whether you're coming to coaching sessions and asking questions. And you find that a lot of people just don't necessarily really understand what it means to practice with a purpose. So I want to give you a book recommendation today that could really, really help you. If you've ever heard of the term deliberate practice, it was coined, I want to say probably around 20 years ago. And it basically means there's a very big difference between just going out and hitting shots or just going out and looking at charts and doing it intentionally for a specific goal. So this book is actually from the authors of I believe actually this guy, Anders Ericsson, coined the phrase deliberate practice. And expertise is really a big thing that you want to get out of that, because look, I don't care if you're just trying to save for retirement, fund your retirement, make $3,000 to $5,000 extra each month. I don't even care if you have a full-time job. What you should be doing is understanding how to improve every single week. And quite frankly, if you're in my universe, how to improve with every decision you make. But let's say that you have a full-time job and you are just looking to say, I want to be better this week. And that's actually a big thing that we're going to talk about today, where I'm going to show you, we're going to walk through what happened in the market on Friday and why it was so significant, and why in our Saturday game plan meeting, I pointed it out to everybody and I said, watch that. It is important, but it was lacking one little thing, but we're seeing follow through on the bullish side this morning. So I want to start out with that. Okay. If you don't mind, we're going to hop right into that. And we're actually going to talk about this price action here in the market on Friday. And the one thing it was lacking on Friday was this down here. I would have liked to have seen this been a little bit more like this. It wasn't. It was okay, but it's still in play. All right. So we're going to walk through and talk about, let me zoom this in a little bit just so you can actually see everything that's going on in here. All right. This is what we're starting out with, right? Well, actually, you know what? First of all, let's get into the earnings for the week. I think probably the biggest stories for the week are the retail stocks, Target, Home Depot, Walmart, a couple of stocks like that this week. If you have, here's the list right here. I actually am looking at Walmart a little bit more this week. If you didn't happen to catch the price action it's had recently, this 160 price target got put on it. I want to say somewhere over here was upgraded, and it took pretty much forever to get there, but it stayed there, paused, and now you can actually see we're kind of hovering right above that level where earnings are scheduled to come out on Thursday. Now, if we kind of zoom out a little bit more, Walmart has had some really fantastic news about operations and that kind of thing right now. And if we kind of zoom out all the way on the 3-month chart, you can see that it's actually resting right in front of all-time highs with a really nice pause after breaking out of this 160 level, which is what the upgrade. So what we're going to be looking for when Walmart, which is scheduled to release this earnings this week, is you want to be paying attention to the guidance. 160 for Walmart was the last number where I said, okay, if it gets up there, the cash flow makes sense. So if we have better guidance and we start to see that they are raising their targets on Walmart heading into earnings, and especially after the earnings comes out, earnings on Walmart could be a very nice catalyst to trade into the end of the year. And this is another thing that I want to point out. Consumer defensive stocks and healthcare stocks are starting to catch a little bit of a bid. Now, you kind of put these pieces together and you kind of have what they call a thesis for your investment, right? A thesis is just a tongue twister. Basically, it says, what's the reason you like, give me an argument for that, right? So when all of these tech stocks were like rocketing higher and we were seeing these amazing moves based on the AI story, right? AI kind of took over heading into the end of last year. AI just exploded, and a lot of these stocks got up to a valuation that just absolutely didn't make sense anymore. So if you didn't happen to see it, NVIDIA, as of even a week ago, was trading at 232 times earnings. That's a huge number. S&P average is 16 to 18, just to give you some context, right? So what's going on right now is we're starting to see second-tier tech stocks catch a bid simply because the large cap tech stocks have run out of room for likely profit potential at the current levels. It doesn't mean they're bad companies. It simply means if you're going to put money into that deal, what is the likelihood of it being worth it? So if you didn't catch Meta down in the 80s late last year, early this year, NVIDIA, SMCI probably the most amazing stock for this year. If you didn't happen to catch it, these consecutive, here's the first earnings season. Look at how much it paused in between there and then actually paused again here. Now you can see the leaders in the thesis and the argument for the beginning of the year are starting to roll over, right? We also talked about Tesla. Now the other side, which is kind of what we focus on and what we're kind of really good at in our community, which is focusing on where the money is, the order flow, where the order flow is kind of working its way in and out of individual sectors. So you can see we went from pretty bullish in mid-July to communication services, and that was mostly being carried by Meta, and we're going to take a look at Meta here in a second. Look at that. I mean, that's where most of this entire group is being carried. Now that's actually cracking down a little bit here this morning as well. Kind of working our way over into finishing July pretty neutral, and last week was here. So what I want to talk about right now, and I really want to bring this point home because I kind of want to take you behind the scenes into our game plan meeting from Saturday. We kind of called it the holy grail of trading, and I don't say that lightly. I'm actually going to show you. I want to show you what it looks like. What we talk. You're going to be able to take a snapshot of this, right? So when you kind of take a look at what we discussed, the biggest thing I want to get across to you, and in a really, really big way, is that you have to learn to recognize that there's different market conditions. Probably one of the most common mistakes, I don't know if there's any other way to word it, is when traders come into our community, or when somebody came into my trading floor in New York City, they couldn't make distinctions to determine, is this a great idea? Is it still valid? Has it changed? And how do I know all of that? And here's the important thing. And then when you recognize that, moving the amount of money that you are allocating to each idea based on the quality of the idea, if it's still valid, and then pulling yourself back if it's changed. So we just talked about a lot of the market leading stocks: NVIDIA, SMCI, Tesla, Apple getting demolished on earnings, right? Excuse me, Tesla with earnings, margins, right? Big factor. So when you understand just that very concept that every deal is not the same, and you now are stepping up, and this is kind of getting back to the book, right? This is getting back to the book and saying, well, what am I supposed to practice to understand how to trade more profitably, consistently, predictably, and sustain that over a longer period of time? Well, I'm kind of giving you clues right now, and that's really in how we break down sector rotation. Sector rotation in the bigger picture of the market, which first thing we're doing is, what is the tone of the market and how does the market look? Is it bullish, bearish? Is it sideways? Is there an obvious bias? Then you go over and you take a look at which larger groups of stocks. And the way that we kind of talk about this is, we mentioned that there's power when a group of stocks has attention by the smart money, has attention by the institutions. Now, don't worry about who smart money is. It could be hedge funds, it could be banks, it could be pension plans. All we know is that it's the people that are pushing stocks around. So it's easier to notice when a large group of stocks are doing the same thing, because that means that there's a lot of institutional money focusing on that. And then we just kind of hop on back of them and we piggyback and we track it until it's either still valid and we're okay, or kind of changing and we're like pulling back on risk, or completely changing and validating the changing. And there's probably no better visual of that than what we have in Tesla, where Tesla, pretty obvious, changed and then validated that change. So you have conviction, something's going on, you kind of sit up in your seat, and then you have this move to the downside where it validates. Now, I want to get this across to you. What I just showed you is not complicated, but you need the roadmap first. You need to know what you're looking for. And I can't express this strongly enough. If the market is confusing to you, if the stock market is overwhelming to you, and you feel like it's just chaos, right? That just means one thing. It just means that you don't have a structure yet. You don't have a structure that says, if this happens, then that means this. If this happens, then that means I should do this, because this is likely to happen next. But more importantly, that's what you're looking for if it's obvious and doing what you want it to. Everybody could celebrate the winning touchdown, go across the line, right? But those of you that separate yourself from everybody else in the stock market is knowing what you're looking for and then knowing when it changed. And if it changes, you take different action. And raise your hand. Raise your hand if at the end of 2021, when that market had that really beautiful move to the upside, quantitative easing, liquidity cycle, pushing everything to the upside, and then all of a sudden they announced liquidity is going out of the market and we had this move to the downside. Raise your hand if you got caught. Raise your hand if you didn't have a plan and you sat through all of 2022 hoping the market came back. That's not necessary. And I want to give you the quote that we give to everybody in our community. When you know what you're looking for, you're never lost. And that's the only way to know if it's obvious, if it's still valid, and how to know when it changed. Now, when you kind of bring that all the way back down into the market, sector rotation, industry groups, and then you finally pick which stocks you think are at an optimal entry that have the greatest reward potential, the market's really not that confusing. Think about this now. Is it obvious? Is it still valid? And how do I know if it changed? Once you have those pieces of the stool, the market's never confusing anymore because now you know what you're looking for. So we kind of bring that out into sector rotation and we start to take a look at where money has been flowing, how long that money has been flowing. That's going to dictate how much are we putting into the deal. So once you understand how to recognize, awesome, maybe it's changing a little bit. Oh, it has changed. You're going to put different money into each trade with conviction. And this is really where a lot of people get that win-loss percentage garbage that they see spewed all over the internet and social media and YouTube and all. I have a big win-loss percentage. Let me tell you something. If you are bragging about your win-loss percentage, there's a pretty darn good chance you're cutting your profits short and you don't understand when you have an amazing deal on the table. And not only should you be holding it, but you should be adding to it. Great traders make that distinction and they practice every single day looking at charts saying, what is the quality of this idea? Rookie traders are constantly saying, give me the entry, give me the entry, give me the entry, without any context of whether or not that bull flag is the best idea right now and what's the right capital for that particular idea. This is what separates everybody who week after week, month after month, they start to see their account slow down. Maybe they stop the losses because they're making better decisions and then eventually get to the point where you understand the market's really not that complicated. You just need the right map. And that's kind of what we're talking about on these calls here. So hopefully you're joining us every Monday. And if we're doing a good job on this, please do me a favor. Make sure you give us a thumbs up and hit that subscribe button because it lets me know that you like this kind of stuff. So let's kind of work our way through the newsletter now. And we're going to break down how we're looking at the market this week. Very, very important. So here's the earnings coming out this week. You might want to take a snapshot of that. Oh, actually, I promised I was going to show you this. So let me actually kind of zoom this in. And you can see actually the new website is just, this is actually what's going to be on the app. By the way, all of this stuff is going to be on the app. We're very excited about that. So I want to give you a breakdown. Again, you can take a snapshot of this. This is actually a segment from our swing trade session on Friday. Okay. So you can actually see that this was a really, really big part of what we discussed. So when we go into those weekend meetings on Saturday morning, my goal for Saturday is not only to break down the market, show the sector rotation, show where the better ideas are, show where money is starting to flow out of particular groups, but it's also just as important about setting the mindset for the next 2 days of our entire community to say, what kind of market conditions are we heading into next week? What is likely to happen next week? And what does that mean for how we should allocate money? Now, this is the part that I think a lot of people mistake. Oh, but we lost money on that trade, or we made money on that trade. The only thing that matters is whether it was a good idea. Remember the definition of edge. Likely to happen most of the time, but also means sometimes it won't, even if it's a good idea. So when we're talking about making money and putting different amounts of money into a deal, we are also talking about you can have losses on lower allocation because you recognize it was okay. I'll give you an example of that trade right now where it popped out. Maybe it doesn't have really good stacked order flow. Maybe it's 1 or 2 days, but you're okay with putting a beginner position on it. And that's included in your win-loss percentage. But if you did a great job of recognizing it was an initial move in a new direction, you lowered your initial position size versus a stock that is exploding. And I believe that we just said that the stock has now had 18 out of 19 green candlesticks on the daily chart. So this is the power of sector rotation. So while everybody who does not have a roadmap is looking at and watching these guys get clobbered because they were strong for a while, and let's go to NVIDIA, let's go to AMD, all these AI stocks that were flying at the beginning of the year, instead of having a roadmap that says they slowed down, they're neutral, and they reversed, and not having a roadmap for stuff like this, you're going to be saying there's nothing going on and I'm frustrated, as opposed to having a roadmap that tells you these are the stocks that are in play right now. And to bring this home even a little bit deeper, look at how obvious that becomes when you recognize and understand what stacked order flow means, because you have the roadmap. And then you break it down even further down to the industries, and you can see how long institutions have been allocating money. It kind of becomes a game of, okay, I'm just like shifting every couple of months, best case scenario, just paying attention, increasing share size, decreasing share size, switching over to, hey, that's where it's all green over there for a couple of weeks. Let's take a look over there. That's where the stock market becomes a lot simpler when you have the roadmap. So I just want to challenge you a little bit right now. If you are frustrated in the market, just ask yourself, do I look at the market the same way every day? Do I know exactly how to identify if a trade is obvious? And if you use our term, has order flow stacking happened? Are they buying it from one day to the next, 1 week to the next, 1 month to the next? Are they holding higher bids? Are they paying higher prices? And how do I know that's still valid? How do I know if it changed? Generally speaking, those two things happen either in price action and volume. Best case scenario, both of them. And you might have watched some of our videos where we call that accumulation or distribution. High volume pauses typically lead to a reversal. Light volume pauses typically lead to a move that continues in that direction. So I'll give you an example of one of the ideas that's in the watch list this week, AbbVie. You can clearly see how AbbVie reversed the selling order flow, and you can see a push and a pause, a push and a pause, a push and a pause, and now you can see the profit potential on the next trade. So what's more important, though, is paying attention to this and recognizing, very similar to what we did in Tesla, on the other side of the market. Now, I hope that one of the things that is standing out here right now, there's probably thousands of indicators on most softwares, and a lot of softwares are great, right? That's actually what I use. I've used very, very few indicators because I don't need 5 watches to tell me what time it is. I just want to know, what is the structure that tells me I should put my money out there, and what is the structure that tells me I should change that bias or change that opinion. All right. So we're going to walk through now what all of that means, because we're going all the way back to the beginning of today's video where I said one side of the market was screwed on Friday, and raise your hand if that's ever happened to you. I'm going to show you how to recognize that now so that if it happens to you, you're aware of it next time. So we're going to break that down over here in the market. Okay. It's the last place that I'd like to buy stocks. The S&P 500 rests just above the daily 50-period moving average. So that's kind of the last line in the sand for me. Buying pullbacks is a classic strategy, one that sets up solid reward potential. And this is important here. At the very least, we're looking for a test of the previous high. So what are we actually doing there? We're actually setting up the intended profit target to justify the risk. So again, think about the roadmap that you're looking at in the market. Do you justify the risk by saying what the likely target is? Very important, right? Likely, not definite, but what's likely? Why should I accept this risk? And this is what we're talking about here. So we kind of pulled back to the previous breakout level, and now we had this reversal. And I want to break this down even further for you. And I want to talk about that quote unquote group of market participants and what happened on Friday. So if you were in our community on Friday, I was talking about this level. Now, we had a lot of bearish gaps down in the market. We had some stocks just getting absolutely clobbered after earnings, and we pulled back really, really hard. Even some of the market leaders that we just talked about, NVIDIA, SMCI, AMD, which gapped up and then has been going down since then. But look what's going on in the market. The market actually had that support level. We talked about this on the game plan meeting on Monday, and we kind of built this argument around, we've had some pretty massive bearish gaps to the downside, but the market just keeps testing this 445 level. It's kind of significant. So that's what we went into Friday morning talking about. Watch that 445 level. It's very, very significant. Well, what ended up happening is, now think about this. Let's talk about, let's say Andrew. Let's say Andrew is a short seller, and he's looking at these levels, and he's like, wow, the SPY finally broke down, right? And he's feeling really good all the way up until the afternoon on Friday, when the market breaks down, reverses back up. So if you remember what I said about 10 or 15 minutes ago, I said, what do I want to see? What don't I want to see? If this happens, then I plan to do this. If this happens, then this is what's likely to happen next. So if Andrew happens to be short selling the market, he's an early short seller. Remember, initial reversal, initial position size, right? And he's having a coffee at Starbucks, 2 o'clock in the afternoon. All of a sudden, the market does this. And now we not only get back above the opening price after we broke down from Friday, now we're back above that significant level and we closed near the high on Friday. So if you were a short seller on Friday and you saw that price action, this is what we talked about on Saturday, you're kind of screwed. That's exactly what you did not want to see. And if you remember last week, we actually talked about Disney as well heading into earnings and this gigantic support level in Disney. And we talked about looking for a rally in Disney last week into earnings, and we kind of actually got that. So we talked about a significant level, just dipping right at that level. And if it doesn't hold, it bounces in the other direction, right? This is not really complicated. What we call this is called price discovery. Every day, all day, buyers and sellers are discovering what the right price is and can we push that supply or demand through there based on the institutional order flow, right? So coming into this week, that's the argument that we had on Saturday, and you can see we're actually getting a little bit of follow through today. Now, does that mean we're guns blazing going in there and buying today? No. We got a reversal on Friday. We followed through. The futures are up a little bit now heading into this morning. What we are now looking for is what we call a well-bid candlestick. So well-bid candlestick after Friday's bullish U-turn. So a U-turn is one that trades down and reverses back up. Let me see if I can actually pull that in here for you. We got a nice little visual. Where is it? Here it is. So I'm going to pull this into the video so you can actually see one of the setups that we're looking at. And this is actually called a bullish U-turn. So if you see this candlestick here, it occurs after 2 or more successive lower lows. So the SPY actually pushed down and reversed back up. So you can actually see this right here. So this candle right here is what we're looking for today. If we get what's known as a well-bid candle following this bullish U-turn, again, how I don't want to say cool. How cool is this? We're mapping out what we're looking to see. This is what I was talking about before. When you know what you're looking for, you're never lost. So we knew what we were looking for on Friday. It did not follow through. It actually reversed, became a bullish U-turn. So what's the map? What are we looking for today? When you know what you're looking for, you're never lost. Well, best case scenario to up level our bullish sentiment and maybe even allocate a little bit more to buying this dip. Best case scenario is if today opens here and closes here. If we close in the top 10% of the day and we have increased volume today and higher highs and higher lows. As we start to work our way into those positions, if that happens, then we kind of migrate over to sector rotation to the places that already had bullish order flow while the market was pulling back. So technology stocks started to go down. So we kind of faded away from those and migrated over to energy, healthcare, industrial stocks. So we just flowed with the money. And the exciting part about that is that's exactly what happened at the end of 2022. A lot of people like the ending last year, bear market, nothing to do, blah, blah, like all that kind of stuff, right? Not our community. And actually, I want to say hello to Brian Carr. Brian, so grateful that you're in our community. We followed the order flow at the end of last year, doing exactly what we're talking about. And I want to really, again, I want to give you a visual of how powerful this is once you really understand the map. So we're going to take a look at the market at the end of last year to really bring this point home. So if we take a look here at the end of last year, right, you can actually see where prices were. You could take a look at the Qs, kind of neutral here, right? And then you take a look at Dow Jones stocks and look at the rally there. So we in our community actually had a really good end of the year last year, October through January, when a lot of other people were complaining there was nothing to do. All we were doing was following the rotation based on having the map that we look at. So now I'm going to show you how we're looking at the map and knocking it out this week. So hopefully this is actually kind of putting some pieces together for you. So that's how we looked at the market on Saturday coming into this week, what should have happened, who might have acted on that, what they need to do next. So that's how I'm going to break that down for you right now. Okay. So, but the deeper you decline, the less faith that you have in the previous bullish order flow. So if we push up and pull back and have a shallow pullback on light volume, you still feel pretty good, but we're pulling back deeper, all the way to the 50-period moving average. You can see this visually using a Fibonacci retracement indicator. I'll show you that in a second. We're still in that buy zone, but boy, the floorboards are creaking and the Scooby Gang is looking for that trap door. And that's actually what a lot of people are talking about over here. So if you've never used Fibonacci levels, essentially what Fibonacci's are doing, to keep it as simple as possible, which is the way that we like to do things, is once you have a rally, the depth of the pullback tells you how strong this existing rally is. So the shallower the pullback, when it starts to head back up, validates that this is still cool, still good. And we just talked about that here using the 50-period moving average, but Fibonacci's give you these nice, beautiful, color-coded levels that the deeper you go, the less valid this previous move is. So we're kind of still in that first package. We're kind of still right here. So can you kind of visualize now putting these pieces together? We're still above the 50-period moving average. We're still within that Fibonacci level. We had that reversal on Friday. We know what we're looking for today. You kind of go into the day and the week saying, wow, the week it's already mapped out for me. I know exactly what I'm looking for. Now it's a question of whether or not we get follow through. Okay. So if we kind of work our way backwards, let me just answer this question. Billy, that's actually a very good question. I'm actually going to answer that in a different way. So in our community, so Billy's asking about trend following, and I just want to be very clear about this. And I actually wrote about this. I'm going to get to this because it's kind of cool how this ended up unfolding. Remember how we just talked about before about different market conditions and we need to adapt to different market conditions? Well, there's two different styles of trading, I guess you would say, in the market. One of them is momentum trading, where you're kind of just trading that next move. And as soon as that bad boy slows down, you hit the road, you take your profit, and you go to the next idea. Trend following is when that thing pushes up and slows down, you're actually looking for a new entry or to add to that existing position, looking for the next bigger move. The difference between the two, momentum trading, usually getting out kind of on the way up, or as soon as that thing slows down, you're out. Trend trading, you're looking for a big move and you're actually getting out on the way down because you're giving the stock a chance to fluctuate for that next bigger move. So Billy, it's really, there's two things. How do you feel when your stock slows down? Do you get excited and you can't wait to add to it? Or do you get nervous and you're afraid that your profits are going to be taken away? That's going to dictate whether you should be a momentum trader versus a trend trader, because your feelings are telling you your risk tolerance. The other side of that is trend trading versus momentum trading is market conditions. Remember we said a couple of minutes ago before where everything is kind of on the same page? You have a responsibility to recognize that when everything is green or looking the same way and the market's obvious and sectors are obvious and groups are obvious and we're flying like we had for the most of the first half of this year in technology, all that money was doing the same thing. The right play at that time was to be a trend trader from a bigger picture perspective, from a strategic perspective, because more money was doing the same thing. But when we start to notice choppiness, when we start to notice dojis, or what we call melted candles, when we start to notice more trading ranges. So for example, two very popular stocks that we take a look at every day, AMD and let's even say Netflix. Neither one of those stocks have obvious order flow. So if you choose to take a look at either one of those would be more momentum plays, maybe over just the next couple of days, and then you're hitting the road. So there's two ways to identify momentum versus trend trading for yourself. How do you feel when it slows down? And, or even better, what kind of market conditions do you have? Are the market conditions less obvious, but you can find a couple of good ideas? Great. Maybe trade those as momentum plays. When they slow down, you like them. When they slow down, you kick the road out and you're gone, right? Or everything looks awesome and you're like, oh my gosh, I can't wait to add to this position because everything is lining up. But remember what I said. Again, I'm going to keep saying this. When you have the roadmap, you're never lost. The only way to know if it's a trend environment or a momentum environment is to know what you're looking for first. And once you have that roadmap, once you understand order flow, once you understand tape reading, is it obvious? Is it still valid? Everything in the market becomes a lot easier to understand because you're no longer guessing. And more importantly, you're no longer predicting. You don't care what's going to happen a month from now. You only have the information that you could read right now. Nobody can predict. Get that garbage out of your head. Right now, up to this moment, we have all this information and we have to make a decision. Then after we make that decision and we put the trade on, we have a bunch of new different distinctions to make. So it's a very good question, Billy. I appreciate that. So let's walk through the rest of the ideas. You're probably going to want to take a screenshot of this and a screenshot of this. So this whole point, really the entire thing that we're talking about is shifting market conditions, recognizing and changing. And again, this is a lot of what we talked about here today with those changing market conditions, the amazing market conditions May through July, and then how July just completely bled into August, and August has been different. So look at what we're talking about right here. And this gets to Billy's question. Trend trading, amazing market conditions where everything's on the same page versus August that's been, let's face it, kind of choppy. Did you recognize it, lower your exposure, and not put yourself in harm's way because it's a different deal? That's what separates people who maintain their sanity in the market from everybody else. You know what you're looking for and you know what to do. And you can kind of see how we broke this down without actually giving you the video. You can actually see we started to now work our way over into healthcare, tech stocks kind of working in the other direction, position size smaller unless obvious. So what did we just walk you through? So that's only what we discussed in our game plan on Saturday. It's not even all of our coaching calls and all that kind of stuff and our strategy. What I'm hoping to inspire you to do is to say, how do I really look at the market and how do I know what that means? Once you have those questions answered and quite frankly written down so it's repeatable every day, the consistency that you are seeking in the market comes from the consistency with how you look at it, not from being able to predict. Because if you know what you're looking for, you'll know if it's there. If you'll know what you're looking for, you also know when it's not there. And then that's when you put your wallet back in your pocket and you say, I'm going to wait because I don't understand what's going on right now. It doesn't meet my map, and I'm just going to be patient. And we're seeing that a little bit now, especially since August started. So what I'm going to do now is you're probably going to want to pause this a little bit if you happen to be watching the replay. I'm going to give you the rest of the breakdown for this week, which stocks. And again, this is a part of what I do for the newsletter every day, which I said we're going to be, the new app is coming out soon, and the daily ticker newsletter is going to be available to everybody as well. If you have any questions about, by the way, click down into the description and you can reach out to our support staff. Okay. So if we kind of work our way through options, having this is what's kind of cool about this. When multiple market asset classes are seeing the market in the same way, it becomes pretty awesome. So I'm actually going to scroll down there. You could pause this, take notes and that kind of stuff. And you can actually see the inflection points of what's going on. But I want to really get to this point over here, the sector rotation. Crude oil and the $82 level, the 7-8 week rally in crude got above that level and pausing. And now we're actually starting to see even some of the large cap stocks break out. So crude energy still in play. MPC, we just talked about that one. And by the way, look at how simple trading can be, where I don't have any indicators, but can you tell is that obvious? Yes. Is it still valid? Yes. Is it near an optimal entry? No. So you got you on the third one. But this is where trading becomes really fun. Not much going on. Hey, wait a minute, something interesting. And now you got 5 weeks of awesome sauce, right? Keep it simple. All right. So now we're talking about a few more plays where obvious bearish, changed, new order flow. Healthcare, another area that we're looking for. Drug manufacturers, you can actually see here perked up, energy and healthcare. We're just following the money, everybody. We're not making it complicated. We're not predicting. We're seeing where is money coming out of, where is money going into, and how long has that been happening, and how do I identify an idea? So we're working our way through Amgen. We're looking for that to pull back a little bit. NTRA, pretty close to a breakout. You can actually see we set that level right here. AbbVie, we just discussed, got some pretty big resistance up here, not too far, actually setting up a new entry. CVS, again, obvious? No. When does it become obvious and what does that mean? Well, this is the level we're watching here. So we can see we actually have an alert, not a trade yet, an alert for 76. If it cracks 76, and we have roughly a 16% move. So you get the idea of how we're working our way through the market. What does that mean? What kind of deal is on the table? Where is the money flowing into? Where is the money flowing out of? But then that last part is, are we close to the optimal entry? That's a big part of the equation. You can find a great idea, but is it near a good entry where the risk justifies the reward? So you can see how we're kind of working our way through. Again, no indicators. If you want to make the market super easy, there's no indicators here. So working our way down, you can see some of the ideas that we're working on. Some of the ideas heading into the week, again, still sticking into the energy group, and VLO coming up to an area. And you can see how we break it down every day for the community for the week. So that's how we're mapping out this week. It looks like the short sellers, the early short sellers on Friday kind of got caught We just mapped out what we're looking for from a volume perspective, from a daily candle perspective, from where we expect it to close. We just mapped out relative strength versus relative weakness, which stocks were strong when the market was weak. Those stocks should rally, provided that they are at or near an optimal entry. And any other stocks that have been bearish that might be going up a little bit this week, those are short-term momentum plays because they have bearish order flow. Got to separate those two. Going up right now versus heavy selling prior to that, that's also going to dictate how much you're putting into the trade because you don't have all that money behind the idea. So we covered a lot of stuff here today, right? So we broke down the market. We gave you a new book from my bookshelf, one that I really, really enjoy. And if you want to learn about practice, that's a big one, and take that into the market. And we broke down how I'm looking at the market coming into the week and why. Probably the most important thing, and again, I'm going to pull this up on the screen for you one final time here, which is setting up and recognizing different market conditions. When you understand how awesome the market was during May through July and how you should have traded those market conditions, and then how August had shifting market conditions and how that means that you should have adjusted your position size, trading becomes a lot less stressful because you're moving your allocation, you're moving your risk up and down based on what's going on. There's no predicting. We're simply saying what's happening now and what does that mean I should do. All right. Hopefully you enjoyed this, everybody. Thank you so much for being here today. I really, really appreciate it. We do this every Monday at 7:30. We're kind of setting up the week. If you have any questions about the app that's coming out soon, or if you have any questions about the Daily Ticker newsletter, email us. It's in the description, our support staff. Have an awesome day. Have a great week. If we did a good job, do me a favor, thumbs up and hit that subscribe button. I really appreciate it. Have an awesome day, everybody.